We are being joined by Karthikraj Lakshmanan, Senior VP and Fund Manager at UTI AMC. Hi, very good afternoon and thank you so much for your time. Firstly, Karthik, wanted to understand your sense on the markets just as we get closer to the budget. The markets are turning to be very volatile. How are you seeing the budget playing out this time around, and what's your sense on the markets? Will we be able to hold on to the current levels, or are you expecting some more volatility in the next couple of weeks?
Yeah, hi, Srishti. Thanks for having me on the show. As far as budgets are concerned, as we know, this is a vote on account budget, so no major changes expected. As such, anyways, the lot of activities can be done by the government outside the budget as well. Compared to probably a few years back, the importance of budget in that way from a market perspective does come down. But nonetheless, this time around, anyways, it is vote on account budget. So to that extent, uh, may not have to have too much expectations from the budget. Volatility from a market perspective, we've seen a sharp rally in the last couple of months, and to that extent, the valuations have moved up and volatility might remain. We don't really have a particular target from a short-term perspective. We work with a longer-term outlook, and from that perspective, the macros look quite good. I mean, the economy is growing at a very good pace, one of the fastest growing economies. The demographics are in favor, and in the last few years, we've seen earnings growth in double digit. Both structural as well as cyclical companies have been contributing, and to that extent, we've had double digit earnings growth, and that is expected to continue in the next couple of years. So, from a economy and companies' growth perspective, we are set up well, but valuations have moved up, and to that extent, maybe a little bit of caution is warranted.
All right, but Karthik, with the growth in the economy, the banking sector plays the major role out there. And given the Q3 earnings that we are getting to see, the laggard really has been the banking major HDFC Bank this time around. How do you sense the weakness in HDFC Bank at this point in time? Do you believe it's a good time to enter? Part A. And the another question I wanted to ask you is that amongst the private as well as the PSU banking pack, which side of the banking would you like to prefer most at this point in time?
Yeah, individual banks maybe we may not be able to talk about. So I'll broadly give you a sense on the overall private banks. Our preference clearly is for private banks from a longer term perspective. From the banking sector perspective, we've seen that the asset quality, both on the corporate side, is completely out, and even post COVID, there has hardly been any issues on the retail asset quality as well. The corporate balance sheets are quite healthy. The bank balance sheets are quite healthy. All of them are well capitalized, both on the public and the private side. And the system growth also is in teen levels, which is quite a good number. So overall, we are looking at the sector in a very good shape. From a longer term perspective, we still believe the private banks can continue to grow faster than the banking industry itself, and the banking industry in turn can be growing faster than the nominal GDP. So we clearly have private banks growing faster than the banking industry, and the banking industry itself growing faster than the nominal GDP. So that's the secular story that we are seeing. For example, I mean, in the last 30 years, private banks from almost zero, they've moved up in market share close to 30 odd percent, the top five banks. And we believe this run can continue. Specifically, this quarter around the private banks post results, we've seen some better movement, but the near-term concerns from a market perspective seems to be on probably the deposit accretion. But overall, at the system level, the credit to deposit ratios have moved up, but it's nothing alarming from a longer term perspective. We are still okay. The key parameters on the asset quality still continue to be in good territory. And to that extent, we believe from a longer term perspective, the entire banking space looks good, and preferences for private over PSUs. The private is one sector where, compared to even the last 10 years valuations, the current valuations are quite attractive.
All right, so continue to prefer the private banking space as of now. But Karthik, one such theme which didn't participate much in the whole record rally that we have seen is the FMCG pack. And the kind of commentary that we are getting to hear from the likes of FMCG major HUL is that the rural recovery still has some time, at least in the quarter gone by. The rural did not support much. The volume growth wasn't that great. How do you sense the longer term outlook for the FMCG space? And at this point in time, would you like to bet big on the rural recovery in the times ahead, like somewhat that we have seen in the auto space for the two-wheeler companies? Do you believe that the rural recovery can play a role for the FMCG companies as well? And would you like to bet big on this theme?
Yeah, so FMCG companies, again, very well managed, very good return ratios, cash flows, all of that all takes well. But the bigger issue has been the volume growth, like you rightly highlighted. The volume growth in the last few years has been muted, and overall revenue growth to that extent has been in single digit. Some of them could be the category issue, the category penetration itself moving up, and to that extent, they may be looking at slower growth. And part of it could also be the temporary slowdown in rural and some urban pockets. So the temporary slowdown might come back, but what we are seeing is many of these companies are large in size in terms of their revenues, and for them to continue to grow at a very high pace might be challenging. And the valuations, while they've come off in the last 2 3 years due to time correction, they still are expensive. And to that extent, even if at all there is a recovery, whether it will be a significant outperformer is a question mark. And probably one needs to look at them from a valuation perspective. Maybe there could be still some time or some correction left. But these are good companies, well managed, good cash flows. So at certain valuations, they could turn attractive.
All right, Karthik, but before I let you go, wanted to have your take on the healthcare space, because the trend that we are catching at this point is that India sales is quite moderate as of now, but the US sales is a bit surprising from the likes of Cipla earnings that we have seen. What's your sense, and which theme to bet big on when it comes to the healthcare space?
Yeah, so healthcare, again, if we divide it into the domestic and the export story, the domestic is again akin to the consumers, where their branded business have a kind of good return ratios, good cash flows, but the growth is again measured. The exports' biggest issue has been the price erosion that we've been seeing for the last decade or so. Just in the last few months, maybe there are some signs that that erosion may have come off, or maybe stalling a bit. And to that extent, the generics export story may kind of pick up. But what we prefer within the exports also is companies which are focusing on complex generics, where the pricing power is a little better. So on the domestic side, while growth might be measured, the valuations are reasonable, unlike FMCG where the valuations are expensive. So to that extent, the domestic piece still looks good. And exports, wherever there is specialty or complex generics, that's the space we would look at.
All right, Karthik, with this, we'll let you go on that. Thank you so much for making out time for us on ET Now. It was great having you. So that was Senior VP and Fund Manager Karthikraj Lakshmanan of UTI AMC sharing his top themes to bet on at this point in time, as well as his take and the outlook on the markets ahead.